pegged back a little bit yesterday. 25,000 clearly seems to be the tough resistance mark for our market. 24,850 is where the implied open is positioned. But Wall Street opened after a day's break, and it was gains after the Memorial Day holiday. In fact, it's that 50% EU tariff delay which Wall Street has been cheering about, and that was pretty much the case with the European markets as well. And the futures are holding very, very steady. Of course, the big one is going to be Nvidia when it delivers its numbers. So that's something that the street is closely monitoring. And the FOMC minutes, wherein all three major indexes for now have managed to close in with a good handover for ourselves and for our markets as well. The FIIs have been buying back, although the quantum is still very minuscule, but you've got that DII cushion coming in.
Yeah, so first let's look at the global setup, then we'll talk about the Nifty setup, then we'll talk about promoter block deals. Those are some of the questions that, what do we have from US market? Why Nifty is not crossing 25,200, 300, 400, 500, whichever technical level you want to talk about. What is happening? First, the promoters of Indigo sold. Now the promoters of BAT, which is the original founder of ITC, they are looking at selling. So markets have gone up, selling has started. Let's discuss all that. So let's look at the global setup. What I like about the global setup is that the dollar index is down. And yields though, which is the 10-year and the 2-year, it is not reversed in a very meaningful manner. But the fact that the dollar index is down below 100, it is a clear indication that flows or money is not moving back into dollar denominated assets. And gold also seems to be slipping a bit. So the global construct is favoring emerging markets. Now there are no fireworks there, there's nothing new which would inject fresh momentum. But the bottom line here is that globally things are favorable for the emerging markets like India, and that is how you have to take it forward. Global volatility, hello, is now below 20. So the concerns in the world suddenly have evaporated. So this is a good setup. Yields are inching lower, dollar is below 100, yields have collapsed, nothing on the environment which is generating momentum, but nothing in the global environment which also will peg, will push the bears back. So positive bias, you want to use the word that markets, because of the global support, they would be inching higher rather than jumping higher.
Yeah, exactly. That seems to be the case. We've been in that range from the high of about 25,116 thereabouts. The low has been 24,462. So it's been that 1,000-point band that the market has been ambling in the last 10 trading sessions. The move is about almost 1% from the high to the low, and that equates to about a 250-point move coming in. But yeah, the big one, of course, is the promoter selling. Is that an indication of the right valuation in the market? Or I guess it's an individual case when it comes to both ITC as well as Interglobe?
No, actually, not just promoters selling. You had Sagility, you had PG Electropast. A bunch of promoters have essentially are using the right market conditions to their advantage.
And IPOs are coming back.
IPOs are coming back. Now, believe it or not, but these are factors which lead to market hitting the pause button, because see, demand is limited. Where will demand come from? DI, which get flows by SIP and other NFOs. NFOs have dried up, so the only big reliant factor right now is the SIP money. Second, you do have FIs who made a comeback in the month of May, but in last couple of days that also seems to be stalling. So in the month of May, there were no large issues, there were no large IPOs, but that seems to be changing. So I would use the current, this entire, whole bunch up promoter selling and IPOs which have come together, an indication that the market now could be bereft of liquidity, because flows are limited and demand or supply for paper has increased. In that kind of a scenario, we've seen historically markets, they tend to pause a bit. Typically, I'm not making a case that markets will retreat or something, but yes, the inertia which was there in the month of March, where the FII flows were having a very sharp impact in the price action, that will get limited. Nobody wanted to sell. IPOs had taken a back seat after the drubbing they got in the month of April. Promoters said, okay, let stock prices go higher. Why to sell at lower prices? The flows are same. It's not that the flows have increased from some other pond. But when supply increases, that same amount of flow will go into new paper supply rather than chasing the existing stock. So FI number will remain strong, DI number will remain strong, but the impact actually will become lower. It's like saying that where you are cruising at about 25,000 feet, in order to go to 30,000 feet, you need far more engine power than you require when you go from 1,000 feet to 20,000 feet. It's like that.
Oh yeah, absolutely. And just to get into details of what exactly BAT is planning to do, that's British American Tobacco. They're planning to sell a stake in ITC worth about almost $1.36 billion. Remember, BAT is ITC's largest shareholder. It owns about a quarter of the company, according to the data as per the last reportage. Last year also, it sold a position worth about almost 1.57 billion pounds and also used the proceeds to buy back shares. ITC, of course, is a conglomerate, as all we know. And as many as about almost 290 million shares are going to be on the block. The floor price has been set about 400 rupees per share, which equates to about $4.69 per share, according to the term sheet. And the stake accounts for as much as 2.3% of ITC's outstanding shares. So it's a sizable chunk that's going to be out in the market. BAT is going to be using these proceeds once again for share buybacks by about almost 200 million pounds to a total of about almost 1.1 billion pounds in 2025. That's what the company has actually said in its statement. And just very quickly, how the street is reacting to the, reports of this stake sale. And, one is wondering how the stock price reaction is going to be after the block deal adjustment is done.
See, the stock will get toppy, Aisha, because ITC is one stock where supply has not been there. It's only that BAT has decided to sell in last 24 months that the supply for ITC now seems to be really opening up. The thing with the FMCG companies is that they don't dilute and promoters don't sell. So ITC has become this special situation stock where BAT, which is one of the original promoters of ITC, they are looking at selling it down because they really are in middle of what could be called as a buyback program in their parent country. So this is a sizable offering from BAT, and ITC is one of those stocks where you buy and hold the stock, and with this kind of a supply which has come and hit the market now, I don't think fresh buyers will come back in a hurry. As it is, ITC has done nothing in last 1 year. So these are those pension funds and large long only funds. When they're buying it, they may be the buyers when the BAT block deal will go through. But this will ensure that in the near term, ITC, both in terms of demand and appetite and also in terms of the price action, the price action really could be restrictive. It's no longer a cheap stock. I would say that ITC is now fairly valued, and the function of how ITC stock would move would be a function of what will happen to the paper business, tobacco business, and the FMCG business. And those businesses, I think, are growing, and the stock, I think, is pricing that in. This kind of a supply in the near term may just cap the stock price for an extended period of time. It may just act like a lid for the stock closer to 420, 430. So the upside, again, I'm repeating myself when I say that the upside automatically will get restricted.
If you like this video, then like, share and subscribe to ET Now.